upcoming AI interview? Feeling unprepared or taken aback by
Good morning, you guys. We are back to it. Hope y'all been having a good week so far. Gonna see some fireworks today, that's for sure. Morning, Jones. Hope you're doing well, brother. Why is it not switching? Oh, there we go. Alright, well. So yeah, we got some things going on today, as you can see. I feel like we're going to be prepping for tomorrow. So, sorry, I'm like looking at something real quick. But yeah, so it seems like we're gonna probably be prepping for tomorrow. It's also the start of the new month, right? So you got to keep that in mind. The rate announcements yesterday basically have them in preparation for a cut at some point in September, and you can see how the impact has played out in the market. We have just blasted bonds through the roof, but we've also came into a Thursday, right? We're at a area in which price may look to reject, right? We've been bullish. We have gotten above this fair value gap, so that makes me feel like we are probably going to, maybe retest this area. There's a gap there. Let's go see what it looks like. So there's a gap on the higher time frame. So can you guys see the screen clear? Is the quality okay? Yeah, the quality is okay. It's clear. Like, can you see like the letters on this chart right here? Should say order block. Yep. Okay. Yeah, because I'm getting like these weird warnings. But if you guys say that it's clear, then that's good. Yeah, I appreciate you guys hopping on, and hopefully we can get into some valuable stuff this morning. But yeah, so with the Fed rate out of the way, we can see how price rallied up, right? Price has hit a level where clearly it's looking to reject a little bit. We've basically completely filled or attacked the buy side liquidity that we've been calling for weeks. Okay. So with that being said, it's not unreasonable for us to start to maybe see price want to, at this point, attempt to go against what has been happening, right? Go against the bullish sentiment, especially since it's Thursday, right? So there's a good chance for price to want to retrace 20 to 30% of the range that we've ran through. Clean this up a little for y'all. Pull up this. I'm gonna get a couple more of my charts up real quick. Because right now, right, the first thing we always do, obviously, start from the news. Second thing we do is start observing risk on, risk off. And that has to do with the currencies. It has to do with, you know, many different things. Right, so just gonna take that off. 3 indices, yep. So yeah, you can see how the bonds being so aggressive to the buy side, you can see how that impact has reverberated through the indices. It's kept them strong, right? That's why I said to my private community yesterday that we don't want to hold on to any hardline bias right now, because not only have we taken significant sell side and fulfilled a particular downside PD array going into a new month, we also had SMT at these lows here, right? So with that being said, we can see that response. Does this change the overall narrative? Because remember, bias and narrative are different. Does it change the narrative? Absolutely not. Not yet, at least, right? If we start to continue to see price press up and break through like this order block, similar to what it did here, if it can't hold, then obviously things may be not as bearish and may just end up turning around as a whole. Right, so yeah, one other thing I wanted to get us to pay attention to here is in my private community, I have seasonality charts. And so we could see how if we drag this out, there's July. It's going into August. Okay, so the start of August seems pretty choppy, but also favors a bearish sentiment up until like the 10th-ish, right? And then it continues. So August has a bearish seasonal tendency. There's not much. August and September. Is that September? Yeah. And then there's a low, a significant low that forms seasonally, supposedly, here in October. And then obviously that's when the Christmas acceleration to the buy side seasonally may take place, right? So those are just some observations to keep in mind. We also have a seasonal high that forms somewhere in here, right? Somewhere in August. But so the thing is, we've also been bearish, right? We've been bearish at this moment after the last couple months that have been really, really bullish, which is promoted here. Okay, so with that being the case, we have to monitor and see what it's going to do. Like I said, we're not going to just sit there and push the sells, or push the change to buys again until something is proven, because recently things have been bearish. Seasonal tendencies have been promoting bearishness here at this current time. So we got to continue to monitor our intermarket relationships, continue to monitor things like seasonality in conjunction with what's happening in actual price, and then also the intermarket relationships fundamentally with the interest rates, because that's going to dictate where things want to go, or whether they have the ability to run higher or lower, and then frame a narrative based off of that. Okay, so we can get out of that, and then we can go try to find the US dollar as well. Right, so then we could pull up the US dollar, come to where we're at. Alright, so you can see that going into August, there's all three lines pushing up bullish. So we may see, right, the DXY have an interest to rally at some point, right? So if it does rally and there's justification around that, going into this new month, right, we can see how this is, it's got a likelihood for seasonality to yank the DXY up, which again corresponds with that bearish sentiment we just talked about in the seasonal tendencies for the indices. You see how that works in conjunction? Like they work together. So if we can make an argument about continued bearishness in the indices and continued bullishness in the DXY, we then have seasonality based on this current time frame or time period going into August that justifies that fundamentally, right? So it just amplifies clarity, amplifies trust when things are in motion. It just gives you more conviction seasonally, because these are very powerful tools right here. Most people don't use them, unfortunately, right? So yeah, we're just gonna have to see what happens, right? And we can't have a hardline opinion because of this week. If we didn't have the news events this week that we have all layered together, from FOMC to rate announcements to NFP, then we would have more of a stable thought process or condition to go off of, right? But once this passes, it's going to be a very telling thing. So one thing that I'm doing in my private community, we have a little drill going on. One of my students brought to my attention that NFP, from something that he heard, sometimes, or potentially all the time, can set up a Judas swing for the monthly Power 3. So that's something that we're monitoring to try to get some data on. But I advise you guys to do that as well, right? Dig into that study along with us, and maybe on the next call or next calls, maybe you can chime in and give us some of your feedback as well, right? So then we can discover that together, right? Do that drill together. All right. So yeah, we have news coming out. I think we just had news. Oh no, so it's at 5:30. This is my favorite news event for the most part. Unemployment claims generally has a clean, somewhat reasonable manipulation that's pretty tradable for the most part. Not 100% sure if I could trust that this week because of just the stuff that's happening with the news. There's so many crazy news events, so a lot of it can just be preparation. Like you could see, this is seek and destroy here, right? The whole week has just been seek and destroy. Now we're back to equilibrium, right? So you go from this high to that low. We're just right at equilibrium. If you've spent some time with me over the past couple months, when we're talking about conditional awareness, when you're at equilibrium within a range, especially if it's on like a larger time frame than the 1 minute, generally that can lead to consolidation. We're also at a new week opening gap, right? So overlapping things justifying on top of the news event that things can reasonably be anticipated to be sloppy and low probability. That doesn't mean that moves won't be here, right? We're going to continue to monitor and see what does show up and see if we could pull out something good to study. But just, that's one of those things that you learn through experience, and I'm trying to share that experience with you so you can now be aware of it and not have to get beat up in a consolidation and not understand why it's consolidating. Of course, there's multiple layers to identifying consolidation and how to navigate them. And I've talked about them in the last couple of sessions. But yeah, we'll probably talk about it more at some point. But yeah, that's present at this moment. Price again has rallied up. These lines here, that's a daily fair value gap. Okay, turn this off. Okay. So this is a daily fair value gap here, right? It has kind of blown past what I would have liked to see it do. If we were really, really, really heavy and bearish, I would have liked to see a pretty quick, sudden reaction. We may get that today, but it'll just be using the Thursday reversal profile potentially. But again, we have to just monitor that, right? This high here of the fair value gap, it meets with the order block. So this is basically just like the area where it meets the order block. The whole fair value gap is up to here, obviously, but we don't want to see it break through into this order block, right? We don't want to see it get too deep into there if we're trying to see this decline. Hey, good morning, Maddie. Appreciate you hopping on, brother. Morning, Hendrix. So yeah. So yeah, essentially, this is kind of like the layout of what we have going on here. Okay. We have current weekly low, right? We have the order block here. We could reasonably anticipate also the fact that this is a bearish breaker. Okay. So in reality, that's another level we should see respected if we are going to continue to tank. If you look at this time frame, you can see how that is actually the whole fair value gap, right? From the low of the order block down to the high of this candle here. We can see on this 2-day time frame that it's a clean fair value gap. So because that's the case, again, we need to observe the PD arrays that are being respected and just the overall delivery and price, right? There's, the fair value gap here, there's this order block, and then on that daily time frame, this is a fractal high. So if we were to break above this high, that turns off any bearishness, and then it kicks back into continued buy-side delivery for the time being. Otherwise, right, if we can remain respecting, right, if we can continue to respect this 2-day fair value gap, and maybe we can see DXY rally along with the bonds and yields possibly promoting this idea, with the yields going higher and the bonds going lower, possibly, that justifies bullish indices. And then if the yields go higher and the bonds go lower, that justifies this sell idea. Okay, got mixed up a little bit. Right? So if we could see that, then that all justifies the bearish sentiment to continue. But if that stuff doesn't align in that manner, then obviously, like if this fair value gap doesn't hold, if we don't show any respect to this order block, if price just continues to have very shallow retracements lower with hard pushes higher, all those things start to justify bullishness, especially if we get above this high. So that's our last line in the sand, is this high here, right? So for now, it seems we've just filled the entire 2-day fair value gap. Okay. So we want to see what happens. And it's Thursday, like I said, right? So Thursday can present us with a beautiful move in a retracement, right? If that is what it's trying to do. That's, it's something we could possibly see occur. So yeah, you can see how the bonds are now still looking like they want to continue aggressively pushing higher. So that is justification for bullish sentiment to kick in at some point. And I mean, it is kind of holding up. If you look at the NASDAQ and the other indices, it is yanking them higher, right? So we're just going to have to sit and wait for further confirmation to support that bullish framework that I just mentioned as a contingency plan if sells don't work, right? We can also see the yields are tanking. So in reality, just off what we've observed here now and what we now see here, I mean, it's pretty convincing that this is dropping. The bonds are rallying, at least for right now. So if the yields, if the DXY continues to favor sell side and respects this order block continuously, possibly respecting this furthest down wick here, the midpoint, if it could stay below those levels, continue to press towards this midpoint of this order block, then again, that's starting to layer out context and narrative around this continuing to go higher and negating any sell side delivery, right? If all those things take place, right? So we just have to wait and see, right? This is a moment in time where it's the beginning of the month. It is, time where there's a ton of news events. It's kind of like transitioning seasonal tendencies. So first week of the month. It's the end of the week at this point as well. So lots of reasons to give it some time. Don't push your luck. Don't try to get in there and demand something right now, because it is what it is. Like in sports, for example, when the game just starts, you're not going out throwing a Hail Mary, right? You're going and being very strategic, and you're trying to fill out things. Same with your approach whenever you enter a new month, especially because the news is crazy at the beginning of the month. And, you just have to fill out what's going to occur, what's going to line up with what liquidity's been taken, right? What's going to be potentially attacked, map out different things, and then see what sticks, right? See what starts to confirm, right? So that's a rule. If you didn't catch that, that's a rule that you place in your trading journal, in your trading plan, for the rules of engagement. Because there's daily rules, weekly rules, monthly rules, quarterly rules. Okay? And I talk about a lot of these rules in my private community, but you have to have a way to frame out everything and be prepared for everything. And then when things end up happening, like when certain times of certain things occur in price, different times of the year come about, you have a process and an expectation and rules to help navigate and then also protect yourself from what may happen, opposed to what you believe, right? So yeah, just some rule considerations and price navigation considerations as well, right? So I hope the higher time frame makes sense, okay? Because that's pretty much the gist of the higher time frame. All the things that we just talked about. We see how this has now reached down below here. On the live call yesterday I did with my private community, we saw this was being left open. That's now not the case. So it looks like they've dug deeper into the fair value gap. So that's kind of interesting. So if we are bullish, if things end up being bullish continuously in the yields, in the bonds, then that's going to support this going higher. If not, if the bonds end up turning around and going lower and the yields end up going higher at some point, it doesn't look like that's the case. But if that does happen, then that would result in a response aggressive to the buy side being supported, right? So again, we're here monitoring what's going to occur. We'll let the open price come. News has just occurred, so we may see some fireworks. Not fireworks that we want to participate in, obviously, because of all the stuff that we've discussed, but it's going to be useful to see what transpires here. It is Thursday, and if DXY ends up, not supporting the sell side, then obviously we'll see, the indices fall in line with the opposing view as well. But yeah, based on the bonds and yields, I'm favoring that the DXY is going to continue to fall. Should see the indices start to show signs of continued bullishness. But again, we need more context and delivery and price to fully get behind that, and we must be cautious because of the news. That's just a reality. It's not something people like to hear, right? Because we want to be in the market and know every single tick every 5 minutes, no matter what. And that's just, certain times don't allow for that, right? There's a time to prep, there's a time to engage, right? and you have to decipher the two. And right now, because it's the start of the month, because there's a bunch of news, right? All these different things, we have to feel things out so that we can be prepared and make the best choice in terms of what to do with our finances or demo account, right? Not financial advice. I'm not a financial advisor. And that's that, right? But yeah, so let's pull this up real quick. All right, so with that being said, let's drop down to the lower time frames, start getting a feel for what we see here. So automatically I am seeing, if we favor bullishness, we will start to see, like if DXY continues to tank and then falls in line with that super heavy yields delivery, and then the bonds maybe continue to rally, this may very well be the start of the buy side of a market maker buy model, right? You can look at, this high here as a start, drop, that's first stage accumulation, second stage accumulation, smart money reversal, right? And then first stage distribution would be somewhere in here. Second stage distribution, if we would get up into that level here, and then if we were to do that, it'd be a fast sudden move, getting up above the highs, or before that, just getting up to this fair value gap here, right? So that's obviously later down the line, but it's just a possibility if everything falls in line with bullish indices, bearish DXY, and the yields continue to promote that idea, that will eventually occur if that is the case, right? If the relationships continue in that manner. And then obviously if that's to take place based on the bonds and yields promoting bullish indices, bearish DXY, that'll also be seen in the currencies, which you can also use to amplify your clarity and trust in a particular narrative. For those of you that trade currencies, I don't trade currencies anymore, but all this stuff is applicable obviously across the board because everything is connected with everything, right? So you use these different assets for risk on, risk off analysis to get a feel for the overall market sentiment as a whole, and you're able to then, justify a particular narrative, and then you add on seasonality, then you add on COT, then you add on, all these different things, and the more things that are in alignment, the better, right? Especially when there looks to be a clear pool of liquidity, like equal highs or a clear fair value gap, order block, that's next to a significant liquidity pool. The stars begin to align, per se, right? So we could do a whole video on, risk off if you guys would like. But yeah, it's pretty much just the relationship that all these assets have together, and how they impact each other, right? Just another tool in your clarity toolkit, as a part of the WMG family. All right, so let's start flipping through the lower time frames on these other assets too. So they look very, very similar, the indices at the moment, right? Let's look at the highs. So yeah, clearly the Dow has been the stronger of the three, right? But again, we have to continue to monitor what occurs. Again, we're not fully behind the run higher because of where we're at on the daily time frame. We are still in a area where it could very easily just use this as a retracement to then seek these equal lows here, and the wick here, right? And the lows here and here, right? It could very easily just kick back and do that. So that's why we have to just continue to monitor. We have contingency plans for price going higher, if it does give us further evidence that it is going to want to do that based on the bonds and yields, and then obviously based on the intermarket relationships. The news, NFP, it could change everything in one day, 1 hour, sometimes in 5 minutes, right? So that's why you don't want to marry an idea and then get overconfident because multiple things are in alignment, and then go in there, take a bunch of losses, and feel like you have to get it back, knowing that there's NFP and you could be completely wrong. Everything can align, but NFP comes out and disrupts everything, and then you start to feel like you don't know what the hell you're doing, and then negative stuff starts happening, and it's just not worth the pain and suffering that you would willfully put yourself through, right? So that's why we have the approach that we've been talking about this morning, right? So the first macro is coming up, by the way. Just keep in mind too, when you guys are on these calls, if you're ever looking for times when we should look for an entry, just remember that we trade only during macros, right? We trade through macros. So you have a time that I'm looking to take possible ideas if they're present in price delivery, right? So every single time from 550 to 610, 650 to 710, 750 to 810, right? All those macros should be looked at, and see if they present us with some type of opportunity based on the framework, right? All the framework conversations and, narrative and price navigation tools that I try to give you, and all those things that I discuss in terms of trying to find clarity in terms of direction and why it should be doing one thing or another and what changes it and so on and so forth. Those things are so dramatically important, and the amount of good feedback that I've been getting the last 2 months it's just been incredible, and I'm so humbled that many students have come to me, and even for those of you that are on this call right now and continue to hop on. It's just a very humbling experience to know that there's people out there just really willing to sit here and listen to me talk about something I love so much, and then to see them get impacted by it as well. It's I couldn't ask for more, so I just want to say thank you guys, and I hope you guys continue to get value, and just realize that there is massive power in what it is that I try to share with you guys. The goal is clarity, and if you go to my Instagram, you'll see that the evidence is so in your face about how effective these things are. It's undeniable at this point, not only for my own performance that I showcase live, but for everybody else that comes and lends me their ear and takes this serious, because it's no joke what we're sharing here. It's straight to the core, to the root of what will get you clarity, and then obviously if you want to take it to another level, my private community is an amazing resource as well, not only because of me, but also because of the amazing, just incredible students that have now populated our private community. It's an amazing thing, right? So every piece of information that you hear me talk about, you want to keep it close to your vest. You want to make sure that you're trying to dissect it, every little detail that has to do with clarity and bias and navigation. And if you have questions, you have to make yourself known. Make your questions known, because I want to help you guys. That's the whole reason why I'm even on the internet at this point. I have no desire for anything other than to serve, with my time here on the internet. Otherwise, I have no use for it. I don't need, to show off. I don't have to get validation from nobody. I validate myself. The life I live is what validates me. And then the people that I help and their amazing performances and progression, it's also all I really need, and I hope that inspires you guys when you go and check those things out. But yeah, so again, we just already had the news come out at 5:30, so next news is at 6:45. We still see that price is continuing to try to dig lower. So the liquidity pools that are now in our vicinity, let me just clean some of this up real fast. All these things. It's got too much going on here. Okay, so there is a new week opening gap here, but we don't have to really worry about it until it starts getting close. We have this 3-day fair value gap. I pointed this out as well, both here and in my private community, well ahead of time, before this was even happening. We talked about this being a SMT that might push it higher, but depended on what was going to happen this week. And obviously you can see that that has been totally disrespected, so it's disregarded. So we just continue to press on into the direction of price dropping in the yields, and that should then be supported by bonds going higher. And if that is the case, then obviously continued bullish indices should be favored, continued bullish currency should be favored, and continued bearish DXY should be favored, right? So that is what is in my mind, right? That's my sentiment. That's what I want to see occur. And anything that I'm trying to trade towards is going to be based on that, because nothing's changed, right? Well, if this continues, then NASDAQ and the other indices will change, right? They will turn, depending on what happens after NFP. Why do I keep mentioning that and being repetitive about that? Because you have to realize that that's so important. You have to realize how to navigate your perspective. You can't just go in there demanding anything. You have to see the conditions. Sometimes you'll be able to demand it if multiple things align and it's not NFP or FOMC and other rate announcements, so on and so forth, Fed speeches. If it's just a normal day, right, and things are in alignment, then yeah, you can start getting a little demanding, right? Just make sure you're professional at taking profits, at least at a minimum, right? A minimum target, and good things happen, right? So yeah, we got to see what happens at this order block here. If everything continues, again, just to really drive the point home, if everything continues with the yields going lower, right? It's Thursday, so it may look to reverse for a Thursday reversal, right? If that is going to happen, then obviously we'll see the DXY continue to do the same thing and just kind of reverse a little bit. We don't want to see this aggressively smash through this order block here, right? If it does look to break through the midpoint of this order block, that is not what we want to see, right? At all, right? And it wouldn't be unreasonable. It wouldn't be an unreasonable expectation for price to hang around in this little range from this high to that low, right? It's taking buy stops, taking sell stops. So if you go from this high to that low, like I mentioned earlier about equilibrium, right? If you go from this high to that low, we're resting right at that. And we're ahead of NFP tomorrow, right? So keeping that in mind, don't let today frustrate you if you feel disjointed or if you have felt disjointed this week. Again, you have to know how to navigate your mindset and how to manage your expectations, which is one of my 11 categories in the process of trader development, right? It's the first thing, mindset and expectation development, because it's just that important. It's the thing that is not flashy, doesn't make you money right away, but in reality, without that skill set and the other 10 that I mentioned, without having an answer to those things and a strategic approach to all those different categories of learning and development, it's extremely difficult to be highly effective long term. Right? I just want to shout out one of my students also. I shouted him out yesterday because he made me aware of an amazing accomplishment. But shout out Maddie. I'm super proud of you, brother. Just keep killing it, right? Just keep showing up the way you do. Results speak when you put in the effort, and you don't make excuses. You take responsibility and accountability, and have patience with yourself. Don't be aggressive towards yourself, and just keep being positive. And in regards to navigating funded accounts and management of those accounts, how to do it properly for longevity, and to amplify your ability to keep those accounts. We should probably get on a call this weekend and discuss a game plan, right? And see what will work for you within the different models and approaches that I use for managing funded accounts. But yeah, congratulations, Maddie. I appreciate your trust since the start, and I'm super grateful that you've been getting value, right? And I'm grateful for all you guys as well, right? But Maddie, amazing job. Keep up the good work. Right? So yeah, let's actually I'm gonna do this. Let's put this on Front Street here. Right? Keep a larger view and then take this as well, split that up into a larger view, and go to the 15-minute chart. So again, this may very well be a market maker buy model here, right? I wouldn't be surprised. I really wouldn't be surprised if this high to this low ends up turning into price continuing to go higher, and it does end up being a market maker buy model, because this first accumulation, right, has happened so late, right? Like this deep accumulation here, or distribution has happened above equilibrium of this whole range, and it was so aggressive, it may not have a second distribution, which is the highest probability, one of the highest probability things, right? Second stage distribution is ICT's a very favorite, sorry about the stupid train. It's his favorite framework. It's his favorite thing that he uses. And if he could choose one model, he said he would choose that, because it's, for one, it always, for the most part, promotes a low risk, high probability stop run, or aggressive attack through a particular liquidity level, if it's in fact a second stage distribution, right? And if you're able to mind you, the second stage distribution is already when the whole market maker buy or sell model is finished. All the elements should be in place, so you can see the whole thing. You're not really anticipating, the whole entire market maker move, right? You're just getting that one segment. But again, obviously you have to be able to navigate and identify market maker buy and sell models to be able to do this. It's like a prerequisite, obviously. But once you're able to do it, it's extremely powerful. And not only is it powerful, it also allows you to have more patience, right? Because you're waiting for the best opportunity. And if you sit there and monitor second stage distributions continuously, you'll see it's just insane. It's so quick, so fast and sudden, and it's something that you can build a huge narrative around before it gets to your opportunity of entry. And it can also be framed out on every time frame. You could frame out a 1 hour market maker buy model, right? But then every retracement lower for the sell side of the market maker buy model, right, like this, for example, right, could on the lower time frames present a market maker sell model to get us down to a PD array that could then set us up with that 1 hour smart money reversal inside that 1 hour market maker buy model framework. And then every little retracement on the buy side of that market maker buy model, right, as it's pushing higher, that retracement lower to set up the continued buy side of the curve would present you with like 1 minute market maker buy models as well, like this, for example, right? On the 1 minute, this retracement, if we do continue being bullish inside this larger market maker buy model, that specific point in price, that retracement on the 1 minute, can continue to deliver market maker buy models on a smaller time frame basis within that larger framework until we get up into this level, right? So I hope that makes sense. I did mention something along those lines and that school of thought in my market maker video. So if you haven't checked that out, definitely go check that out. It's powerful. I've gotten a lot of good feedback from that as well. But yeah, I hope that makes sense. Very, very eye-opening epiphany, right? So yeah. So this is our 15-minute time frame. So based on the liquidity pools that I tell you guys to focus on, first of all, we can obviously see how from this high to that low, that larger range, we could see our equilibrium price point. We could see that we've aggressively created a low of the week, right? We're past Wednesday, we're into Thursday now. So we, if this does remain bullish, this Thursday reversing is justifiable, right? But again, to confirm any type of narrative or bias, we want to make sure we're layering intermarket relationships on them as well. Okay, right? But what we see here, we see a gap up here. That's a pretty interesting area. This is a new day opening gap from last week. It is still a gap. So if we are bullish, that's just another layer, another reason in terms of context for price to want to continue to run higher. If the bonds continue to push higher, if the yields continue to push lower, and then, alongside that, we would see DXY go lower, promoting this possible bullish run. Now, if price is to smash through this level here, we are still inside this daily fair value gap. Remember that? Don't lose focus of that higher time frame view, because it's very significant when we're trying to navigate lower time frame price structure and delivery. Okay, we do see from this time frame the amplification of why these little tools that I have, these indicators, why they're so important, especially for the untrained eye. So you can start to really develop a very effective view in terms of finding different levels that are important, and then overall just being able to navigate. You know what I mean? Because we're trying to look at daily ranges, which are highlighted between these red lines, and then weekly ranges, which are separated by these gray lines. So we see that the previous week's high is over here. So if bullishness does take place, we have a pretty clear target, a reasonable static target, that being this weekly high. We see that the previous week's low was violated as a draw on liquidity for Tuesday. Okay, so that's hopefully powerful for you to see. And if you go back and do these types of studies, you'll start to really have a powerful navigation skill set, right? And it's much needed. It's like a mandatory thing if you're trying to gain clarity. Because if you don't know how to navigate, how the hell are you going to have clarity? Just like risk management. If you don't have limits and a thoughtful plan to manage risk when you're in good times and bad times, how are you going to expect to be in the moment in a high stress environment and then effectively make a decision to protect your capital, versus, being fogged up by the ambition to make money? That's why a trading plan is very important. That's just another reason why trading plans are so important. And that's the main reason why I make my students that come to me, or anyone that comes to me asking for advice, I make them make a trading plan. They see a template that I make. They see the categories that I have that you should be having an answer to eventually, to minimize confusion and guesswork. And then, from there, it's a solid foundation versus just going in there with a random plan written on a sticky note that you put in your drawer, that, it's not even being an effective tool to help you, right? That's why, it's the very first thing you do. Even if you don't know what the hell you're doing, you still have to make that a priority. Because if you don't, you're going to continue aimlessly looking at videos, trying to find a silver bullet, one, topic that fixes everything and makes you have clarity. When clarity is achieved by having multiple skill sets within this industry, within this trading endeavor, and then you merge those things together. I got into a conversation with one of my students yesterday, and we were talking pretty much about, I think it was Maddie actually. We were basically talking about clarity, and what's involved with clarity, and how it's like a puzzle. And in order for you to get to that clarity point in your journey, there's multiple things that you have to learn. And then over time, as you get exposed to these different elements to being a good trader, especially as an ICT trader, you end up figuring out what goes together, what doesn't go together, especially if you do things like you guys are doing right now. hopping on calls with people that know what the hell they're doing, that prove that they know what they're doing. You know, it's just very important to kind of vet who you're listening to, because most people are freaking liars, and it makes me sick. And it's part of the reason why I do these things. You know, it's part of the reason why I have the community that I have, because I'm sick of hearing people victimize people just like I was victimized. So I want to be at least a small combative element against those people's BS, because this has changed my life. I have students that it's helped change their life, or at least been a beneficial thing to them and helped them cut hours of work. Some have quit their jobs entirely. It just depends on what your goals are. But again, at the end of the day, to gain clarity, there's multiple things you have to learn, and it's like a puzzle, and there's a bunch of random pieces scattered all over the table, and you just have to figure out at least a good portion of the story by exposing yourself to all these different things that you have to become good at. And then you'll eventually start figuring out what pieces you want to use to build the picture you're building for the career you're trying to have, and sometimes people need help with that. Sometimes it takes a long time, especially if you're trying to do it on your own, because it's so personal, because we're all different, and every student has to have a different approach for the most part. There's static things like the observation tools that we discuss here on this channel and in my private community. But at the same time, there's also very personalized elements. Like, what is your risk tolerance? That's a personal decision. Just because I risk what I risk doesn't mean you're going to feel comfortable doing the same thing, right? So you have to consider these things, and it's just beneficial to hear these things. And some people don't like listening to these types of conversations, and that's fine. Remember, trading's not for everybody. It's for everybody, but it's not going to be for everybody. You will decide fairly quickly, if conversations like this that aren't involving you taking an entry piss you off or make you bored, you'll start to learn very quickly, especially if you're having very horrible results, that this, you have to reframe your thinking about this, and contemplate whether this is really something that you can handle, and it's for everybody. That's not discouraging. It's just reality, right? It's what people need to hear, and it's what I would have loved to hear, and thankfully I heard it from ICT, similar to this, at an early stage, so I was able to know exactly what I'm getting involved in. And then obviously seeing the possibility and the fact that I never quit, especially not on my family, I just endured it. And all the things that you've been through in your life, if you've had a hard life, all that stuff can be used as fuel and a weapon against any type of adversity you feel or that you encounter in this industry. You know what I mean? So yeah, it's every call you guys get on, every thing that you do to try to make yourself a better trader, it's all beneficial. All the things you've been through, and then as you learn these different skill sets, you become accustomed to what's important, what are static things that you can use in a trading plan, so you don't have to have a bunch of guesswork. Have different tools like this, like I showed here, all these indicators that are specifically focused on key levels in the market, days of the week, time of the day, different things like that to help you navigate daily, weekly ranges, navigate specific liquidity pools, so you're not just looking at a naked chart with nothing on it at all, like not even any indicators, right? Because that just makes it more work, so things like this are very helpful. And then, like I said, trading plan in motion until you become fully accustomed to what you're trying to do and what's important to you as the trader you're becoming. They're vitally important. You know what I mean? So, and those of you that sit here and like these conversations, you are built to be a trader. You know what I mean? ICT has said that before too. Those of us that will sit here and listen to good advice, that are willing to sit and listen to things like this, we are built to be traders. This is for us. That's a very easy filter. But if it's something, hurry up and get to the entry. Hurry up and start talking about price action, right? If those are the types of people that have, or those, if they have those conversations, or those, if they have those perspectives when something like this is being discussed, like I said, you need to really think about things. It's not a discouragement. It's not a bash. It's just reality that must be said, because we're not going to say it to ourselves, right? These uncomfortable things a lot of times get avoided. But at the same time, we can't avoid them. It's going to you're going to have to eventually face it, whether that's you blowing 50 accounts, whether that's you completely removing your ability to trade because all your money's gone because you just don't listen and are stubborn, right? I was that person, but I decided to make a change. And many of my students, they've come from that as well. Many of my students have good careers, Many of my I have one student that's in law enforcement who doesn't want to be a cop anymore. I have a student that is doing radiology. I have students from Greece. I have students from UK. I have students from all over the world at this point. And, they're all from different walks of life. I have many students from the military. And those, for some reason, have been some amazing students. And it's a pleasure to serve those who've served our country here in America. Even if there's military students from other countries too, they just have something in them that allows them to face adversity differently. You don't have to be obviously a military vet to have that type of skill set. But again, these are things that we have to think about. We can't avoid them. And we can't be scared to dissect many topics in the market. We can't be scared of that and think we're going to get lost. You have to be exposed to something to start getting used to it, to understand it. You can't avoid fundamental analysis just because you don't think you need it and it feels complicated. You can't avoid risk management because you're just going to get in and it's not going to hit your stop, or you're just going to get out before it does that. You can't go in with a bunch of hopium, okay, and then thinking that the market's going to spare you. It's not, So exposing yourself to all the different elements, different weapons, different things that we talk about here on this channel, different things that ICT himself speaks about. It's just vitally important because, again, this is a personal journey. And eventually, give it enough time, if you stick around long enough and don't allow yourself to fall off the rails and blow your account multiple times to the point that you become broke and beaten down, you have a very good chance. And again, if you are comfortable with these conversations, if you like to hear these things because you personally feel it's important, because you just see reality, then again, you're built to be a trader. I promise you are. And ICT said that one time, and I'm just repeating that sentiment because it is a fact, similar to most things he expresses. You know what I mean? For the most part. Unless it's like an aimless rant about some person on the freeway or something. Right? But yeah. So yeah. Now let's get into price action. Let's get back into price action, right? We're about to hit the open price. One thing you want to consider, as always, is where is the open price for the current daily range, right? We have taken buy stops. We have hit a daily fair value gap. We have, let's get off this. Let's go to the 8 hour for this. We do see that the currencies are falling, so that's, a sentiment that is giving us some type of, reasonable data, along with, if that downside sentiment can continue, and then maybe we see this run higher, then that'll start making me believe that DXY may pull back into a retracement as well. Go against what it's currently doing, which is, it's pushing higher a little bit. If this does continue to go higher, then the sentiment for this to drop would stay intact. And again, we would have to see the yields rally as well, right? Everything is connected, so It's Thursday, so if this was to start to retrace, I mean, that's reasonable. We've been very bearish all week, right? The bonds and yields or any other asset, they all have the same characteristics, which is why ICT concepts are amazing, because you can universally use them across different assets, you know? So again, using the weekly range perspective, this has been a huge drop. It's not unreasonable for them to maybe come up and try to hit this fair value gap, right? And then possibly either fizzle out until tomorrow, or, right, we may not do anything at all because NFP's tomorrow, right? We're just going to have to see. And, you know, just to remind you guys, the macros are the things we consider and taking entries or framing entries around. At least that's how I view it. And my students have also seen that it's been a very, very positive way to view things. Because for one, if you put limits on your trading, which I say 1 to 2 trades a day, and drop your risk by half if you take a loss, but if you also add only entering in the macros, then that also limits yourself to what, maybe 3 trades max per session, because there's only so many macros, right? There's 550 to 610, 650 to 650 to 710, 750 to 810, and then 850 to 910, and that's the AM session. Oh, Pacific Standard Time is what I'm using as the time zone. And then you go from 950 to 1010, 1050 to, or 10, you can even go from 1045. I've seen 1045 be mentioned to 1110, and then 1150 to 12, which is the start of the last hour. And then the whole entire last hour is also a macro in itself, which generally goes against the overall AM and PM session or daily range direction. Generally that's going to cap the daily range for the indices, right? So all those things, all those times can be considered. Then you also use the news events, days of week as well for timing of particular moves. Like I mentioned before, the news events per week, they all have an impact on what the higher time frame does, because those news events are like macros, but for the higher time frames, or can be used as such. You know what I mean? Like if we're looking for a daily fair value gap fill, right? Say that, the first couple days, right? Sunday, Monday going into Tuesday runs up into a daily fair value gap. Say Tuesday or Wednesday has a high impact news event. Well, if we're already up in that fair value gap that we anticipated hypothetically by that time, and then the news comes out and we start pushing away from it, I mean, you visually start to see the impact that approach or perspective on news and how the news can impact the higher time frame, right? And it's that in itself is a powerful study. Okay, so those of you that haven't taken on that as a study, I highly suggest you do so, because it's going to be very, very eye-opening. And then again, like the macros, me mentioning the macros as like a scheduling tool essentially. If you haven't studied that, also go ahead and study that, right? Those two things are amazing studies for you to do, which further amplifies your assistance in timing, or your efficiency in timing, as well as just seeing how price operates on a schedule. And then if you go back and back test after you've back tested that, those two elements, if you go back and back test the trades that you've taken a loss on, you'll quickly start to see that, oh wow, I was outside of a macro. No wonder it was a little more difficult and stayed in consolidation or was lethargic. A lot of times that's going to be an answer. I know it was for me. Like I would sit there and be like, well, why am I getting stopped out? Why am I stuck in these freaking consolidations? They're so annoying. And then I discovered that the macros only trading during the macros or around the macros, 5 to 10 minutes before or 5 to 10 minutes after, sometimes price will, choose to deliver around then, right? Versus the entry that maybe was taken on before it even came about or was even close to coming about, so yeah. So yeah, we want to see what occurs here. We have news coming at 6:45. We also have the open price coming at 6:30, which is in 10 minutes. So we're gonna want to see what that does. Maybe it'll give us something to attack. Again, we have this massive leap and gaps on this daily time frame. So with that being the case, I would not be surprised if we start to see some type of rejection behavior, especially because it's Thursday. It wouldn't be a surprise for us to try to see this turn around back into this. It may do that, it may not, right? And we want to see what happens after this 6:30. The timing element that I've just discussed and continuously discuss is even more important. It's always important, right? Don't get me wrong, but it's even more important when there's heavy news events awaiting or incoming in that same day, because they still operate on the macros, right? Go back and study NFP and FOMC, or study it this week as well. And just study the macros and see what happens. Study what price does on that daily chart after the news events come out, right? Study how that impacted the higher time frame based on the context that I've just given you guys in terms of timing, and using it as a scheduling tool and a time where the higher time frame makes its move. And then also drop down to those lower time frames and see what happened in conjunction with that particular school of thought and delivery and price, right? Simple studies like this go a long way, and you don't have to do 5-hour study sessions. If you just do 30 to 40 minutes a day, very intentionally going in and studying particular topics, it's very effective. You can't do everything at once. That's like trying to go to college and learn every single subject every single time you look at one subject. You have to cram in everything. Like, how the hell are you going to be able to discover or improve upon one particular thing in an effective manner if you are just constantly doing way too much stuff and you haven't mastered any of them? It's just, we don't do that in school. We're never taught to do that. So we have to minimize the ambition and don't let it be a distraction so we can study the right way. Because eventually you'll get there. I promise you'll get there. Especially those of you that are still here listening, even with me talking about things that weren't related to price structure. I'm telling you, the mindset is so important, all the way up into the mindset you have as you study. You just want to do the most effective things, right? So, and all the stuff we've discussed here help you get to that more effective way of studying, operating in the market, and just the way you think about things while you're engaging and learning things in the market and trying to come up with an idea. So yeah, let's go back through these real fast. Oh, by the way, if you guys could do me a favor, well, it's kind of doing others a favor if they like this type of stuff, but if you guys have any trader friends that like this kind of stuff, or you feel like this channel or the things that I do on YouTube or in my private community, if you guys know anybody that you think it could benefit, I'd love to have them as part of the WMG trading family. And then maybe they got questions that many people have and can bring value to the community as well. Either whether that's here on YouTube, because you guys are part of the family as well, or if they're wanting to have that more intimate experience definitely send them this way. Probably have them start here on the YouTube channel, because I understand how the trading industry is, and I like to get to know my students as well if I can before any type of partnership becomes a thing. So yeah, just send them on over, let them know about the community and how your experience has been as well. Oh, no worries, brother. I appreciate you being here. I appreciate your interest in the community and the things that we discuss. I'm telling you, if you've been here the whole time, throughout this whole conversation, you're built to be a trader, and don't let nobody tell you different. Whether it's your family, whether it's your friends, whether it's anybody that just does not understand this industry, or even someone that does, they're highly critical of you. Don't listen to anybody. Don't listen to any influencers that try to say otherwise, anything, right? Don't listen to no one's nonsense. Because those that don't like these conversations, that must have a trade spoon-fed to them or it's not worth their time, those people will not last, first of all. And, the ones that do appreciate this type of conversation we've had so far, I'm telling you, you're built to be a trader. And don't let no one convince you otherwise. All right, so I appreciate you as well, brother. So yeah, like I have here, right, we do have the highs up here. I'm very curious to see what price is going to do when we hit this midpoint of the wick. Because as you guys know, midpoints of large wicks many times become premium arrays. In this case, a premium array. The downside wicks act as discount arrays. I mean, we could even look at this example here, most recently, right? This wick midpoint acted as a discount array, right? You could see how it acted as a dynamic support level. It couldn't even reach that. So what does that tell you? That tells you that we have a pretty strong bullish sentiment given the fact that we never even could get back to it. And you can see the result of that in the evidence, right? And you can see this order block here I had mentioned. I told my private community if it breaks this midpoint and closes below it aggressively or gets down below this fair value gap, then price will likely not respect the area and we will stop being bullish. But if we don't do that and we respect those areas, then price is going to, in my opinion, continue to go higher. And what do you know, right? Price respected the order block. It respected that fair value gap that I just mentioned. And then also, to put a cherry on top, we had SMT at the lows, right? Between these lows here and these lows here. And you can see the beautiful result attacking the previous week's high, which we had mentioned before the fact. And then we also had this mentioned as well before the fact. This all should have promoted the bullish indices sentiment, but obviously there's been a crack in correlation, which we talked about in my private community. I think I mentioned it here as well in one of the most recent videos. Can't remember. But if I didn't, there is that extra layer of context and clarity, building context about the situation. And when there's a huge crack like that, I mean, it's just telling you that, hey, this is a more high risk environment. So it's just more reasons for you to be calm. Don't operate like a spaz, like a crazy person, because the opportunities will present themselves. And having a plan, like we discussed earlier, really helps you trust the fact that things will repeat, right? So no reason to worry about missing a trade. No reason to worry about any of that stuff, because it's just a drag on your psyche and unnecessary, right? Because things will occur. I promise you, there will be moves that happen, right? And if you hop on these calls enough, it'll be so undeniable that you'll start to think that doubting that a move will show up is irrational, right? So yeah, we see this fair value gap here for the currencies. If price was to bust above that and look like it wants to seek this could very well be attacked if we start to see things promote bullishness in the indices. And then obviously if we can see this continue to be bullish, and then the continued downside pressure here, or downside interest here in the yields, and then if that translates obviously to the DXY as well, right? If I could pull it back up, right? If the DXY ends up tanking off the heels of that sell side sentiment in the yields, then that's just going to promote, promote bullishness in the indices, bullishness in the currencies, so on and so forth. But again, we can't forget that nothing has changed on that daily chart. Okay, we are still inside a bearish 2-day fair value gap, so the sentiment, unless proven otherwise, is going to continue to seek sell side. Right? What happens below this low may be significant. Right? If we get down below this low, and then we start to see price really, really ramp up in the bonds and yields as we sweep through this low, that may be a signal, especially if we start getting price aggressively chasing or aggressively delivering higher. That'll all be sentiment sharing that, okay, we can now start to trust the fact that, we're probably going to continue to go higher. It seems that we've set a low of the week, right? It seems that has been the case, right? But we have to continue to monitor what we're seeing intermarket relationship wise, and what occurs here in the DXY as well, and then eventually come to terms with making a decision. Again, we got to be very patient. We have to have everything lined up picture perfect in order for us to even consider taking any entries, because it's NFP, part of ICT's static NFP navigation rules has to do with your last trade, your very last trade, if you're going to follow instructions, should be taken by AM session on Wednesday. So Wednesday has passed, okay? So that means that if we take a trade, we're breaking the rules, right? And if you're going to break the rules, you have to make sure that, you've proven to yourself that you won't fall off the wagon, okay? That you, on a regular basis, stick to the rules. You have a repeatable process, and, you have to have confidence that you fully know what you're doing. Otherwise, it's best to wait, right? It's best to wait and not go crazy in terms of breaking the rules, because eventually you'll be able to bend the rules a little bit, right? My private community sees me do that all the time, right? But it's not like in a big capacity. It's only when it's necessary, when things are clearly showing that I can maybe, bend things a little bit. But for the most part, we're lockstep with our entire rules of engagement and everything related to our plan and our process, because it has been proven effective. And it doesn't matter what model you use, So yeah, let's see what happens here. So this technically, right, can be looked at as a possible area of resistance if the bonds look to reject, right? If we stay below here, if the yields start to rally, then obviously that gives us continued trust in the fact that this fair value gap should potentially hold, right? So again, nothing has changed bias-wise, narrative-wise. We have been very bearish. We have broken through these highs pretty aggressively, but this could very easily just be a retracement into this daily fair value gap. Now, if we start breaking out of that, right, like I've said before, if this starts breaking out of this and DXY continues to tank aggressively following the yields, and then if bonds also promote this continued bullishness as these PD arrays start to get used as support, then obviously we could start to adjust our overall sentiment and consider trusting further buys, right? So we'll see what happens below this low. I'd like to see it break down below this low. If DXY continues to tank at that moment, if the yields start to continue to tank, if the bonds continue to be strong in that same moment, which it seems like it is, then obviously we will be able to start to frame potential buy-side delivery, maybe seeking this previous week's high. Right, and then if we go to the S&P, we have a previous week's high here as well. We also have a bit of a fair value gap up here as well, if that's the case. We have a possible market maker buy model here as well. Something I don't like is the fact that we have this very clean equal low. That is in support of price possibly looking to seek that area. Right, but we have fulfilled this higher time frame fair value gap. Okay, so that's pretty interesting. If price breaks above this high here and does seek this, we are now in a market maker buy model. And then again, it's confirmed by the intermarket relationships that I try to make as repetitive as possible that lead to specific price delivery related to the bonds and yields and how that impacts things. We have this fair value gap here as well. So if we break above that, not only do we have a fair value gap, but we also have an order block. Right? If it breaks above that, then this order block can now be considered as a potential area to watch price use as support. What invalidates that, if it does get above that, would be the fair value gap, the midpoint of the order block, the swing low here, and this volume imbalance. If we broke down below that, that would turn off my interest in buying. Obviously, that's if we get above here. And it would turn it off if it gets down below here for at least the time being at that moment. Right? So these are just some things going through my head right now so you can get a feel for what I'm thinking about. Okay, so again, we're watching to see what happens here at this low. We do have that fair value gap that I just pointed out. All right, so we'll see what happens within this area here. So now we're at the stage of waiting, right? I hope that everything we've discussed has made sense. Hope you guys have a pretty good grasp as far as what I'm looking to see. I hope it all made sense. Alright, so you can see this swing high here. If we did look to, so now we're getting towards these lows. Isn't it ironic we're getting towards those lows as we approach the news event? So we see that this here is London's low. Okay, so just more amplification relating to the specific liquidity pools I point out that are important for daily, weekly, monthly navigation. We also have London's high, but we also have a previous day's high. Okay, so we got previous day's high there as well. So we're going to continue to monitor what happens at this high. We have a fractal high here. Let's see what happens when we break through this low. We have ran buy stops here, took sell stops here, so this technically can also, if we stay below this fair value gap, it should act as a breaker if it is going to be bearish, just something to monitor. And if that gets disrespected and shows no reaction from it, then that's just further amplifying our potential trust in the moment with price possibly reaching up and attacking these equal highs here, especially if the bonds are going to continue to rally. Seems to be the case. We also have these very obvious equal highs up here. And we're blowing past this fair value gap, so that's pretty telling. So yeah, unless something changes, we're gonna monitor that scenario. So let's see what happens here. I still think we have a little bit of juice to get down below here. Let's go look at the other indices. Look how sloppy the Dow is. It's insane. So there is S&T at the lows. S&P looks like it has been pretty aggressive to the upside here. Looks like a shift. No fair value gap. But again, remember what I say about the wicks. Look, midpoint of the wick, was it respected? Yep. So that's indicative of price being bullish. And then you look at the yields, they're dropping. Look at the bonds, they're rallying. You look at the DXY, it's declining, at least for right now. So many things are overlapping right now, showing that we may look to favor buy-side delivery. We've now broken above this high here. So let's see the response from here. I don't like buying when there's equal lows, right? Even if there's S&T. If it was a little bit higher, then that's okay, that's reasonable. But this is like set equal lows. We're ahead of a news event. I wouldn't be surprised if they wick lower. If they do decide to go higher, I wouldn't be surprised if they just wick lower, stop these people out, then aggressively punch higher. As long as the bonds and yields continue, with the bonds going higher, yields going lower, we may continue to see. We're also, this pink, purple line, that's the midpoint of that daily 2-day, or that 2-day fair value gap. So it seems it's going to respect that as well, right? So again, there's starting to be multiple levels of confirmation that we are probably going to see price reach higher potentially. So yeah, we're right before a news event, so we sit on our hands. No matter how beautiful it looks, no matter how much you think you can enter and how confident you are, rules are here for a reason. And sometimes those rules will get in the way of you being able to take a trade. And guess what? That's just how the cookie crumbles. Just because you could run out onto the battlefield in a war and then possibly kill somebody and kill the enemy doesn't mean you're just going to get up and start sprinting out and just start winging it because you feel like getting into some action. There's rules, right? Similar to that, there's rules here, because this is also something similar to war. So yeah, we got this fair value gap here. That fair value gap on the 10-minute is what this is. So looks like there's also another one here. Remember what I said? This should act as a bearish breaker. If it doesn't, it's just further amplifying that it's not looking to try to go lower. So remember what I said about the wicks? Right? This up wick went to the midpoint, rallied up. It looks like previous day's high is right here, and the full 2-day fair value gap, the high of it is up here. You can see the midpoint here being used as price punches lower into it and pushes away. We're now breaking through this 10-minute fair value gap I pointed out. The bonds are continuing to rally. Yields are continuing to decline. Now we see the currencies looking like they want to favor, pushing price higher a bit. We got equal highs up here for the GBP USD. It's Thursday, right? So price pulling back like this is totally reasonable. Well, in this case, the week has been bullish, and that's reasonable given how bearish things have been. Right, so let's observe how this is used. 2 minutes until the news event takes place. Obviously, you could see that the S&P, before the open price, created the YouTube model. But is that something that you should be able to take ahead of the news? If you're following the rules, then no, right? So again, following the rules will have you miss trades, but in the long run, you'll be grateful that you use those rules, because most of the time, if you break your rules and you're not fully in tune with what you're supposed to do, it doesn't end well, unfortunately. And then you got to battle through that, and it's just unnecessary, So yeah, we're now above this, as we mentioned, right? This whole entire run higher, all the elements that would have prevented this from being valid have been on display and then totally violated. The narrative as far as why I think it would go up here, what would negate that idea, that's all been explained as well. Us navigating or just watching this go higher while using all these other elements to support this idea have all been on display, right? The full process in terms of top down has been on display. So again, I hope that you guys have gotten value from our conversation earlier, and then of course the technicals that we've been digging into so far. So now we're just going to see what, we'll see what gets presented to us, and then whether there's something worthwhile within our rules, because we're disciplined traders, right? We'll see if there's anything within our rules that will present us with some idea, right? Again, keep in mind that they don't like leaving this type of stuff, right? So you don't want to toss that out. And then obviously we're pulling back into this fair value gap, right? It's fairly deep. We don't want to see this type of behavior so aggressive. It can do that, obviously. It's now coming back to this order block. So we'll see what the response is. If it busts through this fair value or this order block here and smashes through this, then obviously we now finally have full confirmation that price is not, it's not probable that it's going to try to continue to tank, right? Remember the wicks too, right? The wicks are relevant here too. Look at how it hit that. It's a signature showing that there's some strength, right? What was above us that could have been used as the draw? Well, I pointed out in my private community, and I think here also live, that this fair value gap at the start of the week, once it presented it, would likely be a target. And then how we respond inside that fair value gap will determine what we do next, and whether this is going to sustain to the downside or turn around and go against everybody that thinks the whole world ended because the freaking NASDAQ dropped like a couple hundred points. So yeah, now we can see where is the time frame where that order block was. Yeah, we have this fair value gap here too. Could act as an inversion. So we got this order block here. Again, we have this inversion fair value gap. You could see how this order block was supported. I missed this, but you could see that the midpoint of the order block was respected. DXY is still tanking. So again, I'm pretty much behind at this point, trying to see price get up above here. And then obviously anything along those lines is disrespected if price gets down below here. Right? So for the most part, everything promoting us going higher, as we've discussed, at least for the time being, is in play. And then overall, for the narrative to change, for us to have clarity and trust in the overall narrative, switching gears from bearish to bullish, happens when we break through the order block I mentioned on the daily, as well as the fair value gap here, which seems to be playing out. Right. And then bonds and yields, like I mentioned, are all supporting the idea. DXY is also, at this moment, supporting the idea with price going lower. And then we kind of see the response from the currencies. We have a clear draw on liquidity for GBP USD above these highs. And then we now obviously see the previous day's high as a possible target. I would have liked if this swept out the London's low. I think S&P did. Yeah, the S&P did. Right, so the S&P presented a pretty decent idea. Right. You can see the shift in market structure. You could see the fair value gap, then rally up, attacking previous high from yesterday. And it's fulfilled that now. So let's see. So the S&P has cleared out the highs. The nasdaq has not. See that? That's an SMT. Right? So if DXY turns here, right? Remember, we're still inside this 2-day fair value gap. Remember how I said things are showing possible reasons for it to go higher, but we're still inside a level that could be a deal breaker and continue to hold off price changing overall narrative. So yeah, we've now taken stops here. It's now a swing low that's been violated. This is such a wild run, right? And there's no clear one-sided perspective here, aside from the fact that, we've still been bearish for the last month. And the bonds and yields have been, promoting this to turn potentially. Right, so things haven't changed from the daily perspective with this going lower, but there's other sentiment related to intermarket relationships and fundamentals that promote, price wanting to come up into, this area here. Given the fact that there's news tomorrow that is heavily impactful, and what I said earlier about how specific moves can use news events to trigger those moves as like a timing tool, given the fact that that's ahead of us, right? It's just another one of those things that promotes caution and further patience. Right, we do see the SMT here I mentioned. And again, I mentioned that they may not want to leave these lows. Right, so the move getting up above these highs, right? That's reasonable. Let's see how this 10-minute fair value gap holds in price. We're now in the 650 macro. So let's see if there's any type of impact from that SMT, or if price just wants to obliterate the buy side. So we still have this untapped weekly fair value gap. I believe it's a weekly fair value gap. Yeah. Untapped weekly fair value gap. I mean, if you just look at the DXY here, it's looking like, for one, it's very sloppy. But two, it looks like this is just a retracement to go lower. That's in line with the yields going lower. and of course the bonds going higher should promote or support this going higher. So yeah, unless this low breaks, I'm supporting buy side delivery, given all these other pieces of context. So let's see how that delivers. It's a fair value gap here. On the 8-minute, this is a pretty beautiful retracement here. It's like a shift here, fair value gap. These up candles here connect as a breaker, so there's another layer of reasoning to possibly trust this going higher. Now, if this breaker midpoint was disrespected, that would invalidate any type of buy side delivery, at least for that specific idea and framework in this moment. Watch this low. Why would this be an invalidation? Because there's that breaker I mentioned, there's a fair value gap inversion, and then there is a swing low. That's 3 downside discount PD arrays. So yeah, if this was any other day, I would have taken the buy side move, given all the context, everything that we've discussed. But because again, I lead by example. Okay? Rules are the rules. And if you're not going to follow the rules, you're just going to do anything you want. And doing anything you want just because you feel like it, again, like we mentioned earlier, it's not a good strategy. So look at this wick here too. Let's see if that tries to respect it. And so like I said, this here turns into a bullish breaker. Another thing you can point out is this here. You go from the high here to the low. This midpoint, this whole range here should act as a balanced price range. Buy side's taken, sell side's taken, price is clearly delivered through it. So another line of defense is this midpoint. That would be for sure invalidating the idea. But again, I personally, if I entered this breaker, which is right in line with my model, especially with all the context we've mentioned all day, all morning, this is right in line with my model. One of my 4 models. We talked about this before the fact. We wrote out contingency plans. We wrote out why this would be a reasonable target. We wrote out what would invalidate this being bullish. We continued to hold on to the higher time frame narrative as long as we could until it was obviously proven otherwise. And even though we were so patient, did that make it so we missed the idea? No. It just helped us build more narrative around what price is doing currently. We did point out SMT, but SMT is only valid when other things can promote that idea, right? Like if you have SMT, a bullish SMT or a bearish SMT, DXY and the bonds and yields have to also promote that idea. Right, so if you took that entry here, that already offered well above the average entry, right? Given the fact that it's news, it's a news week, heavy news week, you take anything from 20 to 30 points and you get out. Because somebody's going to lose 100 points today or more, or to overtrade and blow their account, so on and so forth. Right? So let's see how this is utilized. Study how that works. We have this order block here. Like I said, a fair value gap, a breaker, and a swing low. So those levels are levels you watch to see if this is going to actually hold. And then once that occurs, if that did get disrespected, then you're pretty confident and you can feel justified and not mad at yourself, in the fact that, you could just know that you were seeing the right things and knew exactly when to get out if it went wrong. So you're not guessing like, oh, what if I didn't get it right? Or what if I didn't guess the right areas? What if it just turns around? No, if it breaks through those levels, it should not turn around. And if it does turn around and sweep that out and then go, it's just not worth you getting in that trade and holding on to it. And this rule, this 3 PDA rule for validation and invalidation, both on the higher time frame and lower time frame, but the lower time frame specifically, helps you combat your need to get back into the market. News event also came out, by the way. Forgot to mention that at 6:45. So let's see what happens here. So if price breaks through this low, what I want you to do now is study what happens after that. And we'll see if that validation level is either swept and then price just continues to go higher, which, like I said, if that happens, it's not even worth you spending time on it. But then on the contrary, if that breaks through that low, let's see if that invalidation level turns into price coming down below these lows. If it does do that, that is the most obvious, clear, picture-perfect evidence of how effective this way of validating and invalidating an idea is. It's spectacular to see it. I want it actually to break through this, to be honest. Because if it does do that, I'm pretty confident it will look to take out these lows I mentioned earlier. And it'll just be like driving the point home in terms of how effective and useful this tactic is. It's very simple. Is it complicated? 3 PD arrays that are in close proximity, right? And if this drops, there's probably a change in the yields and the bonds, right? We've now ran up above these highs, so the bonds may look to reject from here, right? This may look to also choose a retracement, right? And then that would turn this into us being interested in seeing these lows taken. Right, we also have this inversion fair value gap we mentioned. So if it gets below that, that's just another level that could be used as a reason to see price get down below these lows. Watch the wick here. Watch the fair value gap. Notice how we're inside this gap here on the S&P. It's fairly interesting. Well, what do you know? I hope this, after you see how this responds here with this validation, invalidation process, I hope that whatever results here is starting to really open your view at how simplistic that aspect of things can be. Obviously, it's going to take time for you to see where the 3 PD arrays are at in close proximity that are important. But, like, for example, if this does not take out this low and just remains above this and continues to press higher, I mean, that's just shows even further evidence that that area is what would trigger or not trigger the move to take place, right? Or keep it valid or not. Again, if it was to sweep through here, then turn and go higher, that's just too choppy. Right? That's not something that we would like to see, right? Because we'd like to see it just, continue to use bearish PD arrays or the bullish PD arrays and quickly push price higher. Go from this high to that low. Equilibrium is right there at that area as well. From this high to that low, it's kind of stuck. It's kind of interesting because DXY has fell out of bed pretty aggressively, right? Yet we're not seeing much of a translation, at least in the NASDAQ. Maybe the S&P? No, not even in the S&P. We still do have that SMT at the highs though, right? So again, that SMT, if DXY was to turn bullish, that SMT plus this invalidation of this low, and then the presence of these equal lows here, and then if the bonds and yields can turn around and promote, this to drop, there's a huge crack here. Because if the bonds are rallying aggressively like they are, and the yields are declining like this, we should have a very sudden move. We're seeing the DXY support it, so that's supporting buy side, right? But you can see the crack, right? So what does that tell you? That tells you things are low probability. That's the very first signal that we're in a low probability condition. So since we're below this invalidation level, let's see how price responds. So 650 to 710, within that macro, like we mentioned earlier, it did offer a move here to close in the rest of this fair value gap. So again, that was a very easy bread and butter move, right? But if you don't have the rules of being nimble and being okay with taking 20 to 30 points in the NASDAQ because it's a news event or a week, right? Heavy news week, you would have gotten taken out because of greed, right? But if you follow the school of thought that I try to, put in everybody's face constantly, this would have been a very easy bread and butter type of setup. This is what I would have taken, like I mentioned earlier, and took out profits from 20 to 30 points. All right. I think there's more news. Yeah, news is at 7, so news just came out as well. And the response from that has been a decline. If we do look at this time frame, the perspective does look a little different. It looks like it's ran above here, came down into the fair value gap, right? So we'll see what happens there. specifically for this move here, you can see that the invalidation level, if you took that trade, all the things that we discussed in terms of invalidation were absolutely valid for that particular idea, right? And again, like I said, if it was to come down here, sweep that, and then continue to go higher, and we remain having this cracking correlation we now see that's really relevant, DXY is rallying from what I see alongside this move here. Buy side, in my opinion, would not be something I would look to participate in, considering that the level I mentioned has been swept and broken. I mean, this is broken, right? It delivered aggressive. So getting down below that, and in the presence of these equal lows, right, that just, like I said, gives me the inclination that we're going to probably see price sweep these out. And this here technically is a YouTube model to sell with that school of thought that I just mentioned. So you can start to see how adjustments are possible in the moment that make logical sense, right? And then where this opportunity was given, right, below price, what invalidates that particular idea? I mentioned this, and look at the validity behind that view. I hope that has stuck and makes sense. So let's continue to monitor. So this breaker here is invalid, so we can remove that. Let's see how price responds inside this fair value gap. We got overlapping inversion fair value gap plus the regular fair value gap. So we've got this order block here as well. Look at the midpoint of the wick. Let's see if that has any relevance. Seems like it will. So we've got these consecutive up candles here. I bet you that's an order block. Not really. Look at the wick here. Look at the midpoint. That's in conjunction with the midpoint of this fair value gap. So let's continue to monitor how that delivers here. Still dancing around inside this fair value gap on the 2-day. So clearly, just looking at price, we've now been able to observe we are in consolidation. We've now also been able to observe the heavy crack and correlation we've now encountered. So the chances of high probability have now went out the window, right? We painted out the framework that, could have positioned us to get up above these highs. Price only got up above here, right? Then we dropped, and then it broke down below our invalidation for that particular idea. We mentioned these lows, how they might not want to leave those open. And then we see the crack and correlation, which leads us to believe that high probability is now out the window. But since price got down below this, we now can consider reasonably the fact that these lows may be attacked, especially if we start seeing anything change in the DXY for the time being. We're inside this fair value gap. See how it respects that range. We see this here, which I just noticed. This here may act as a bearish breaker supporting the sell-off. Right, and then also I pointed out the YouTube model. So you can see the overlapping effect. If price does choose to get down below this low, you can see the breaker, right? This down candle series here. Drag that on over. Price has returned back to that. Right, so we'll see if that holds inside this fair value gap as well to get price down here, especially if DXY chooses to rally. But because we're in a consolidation, our mindset has to be set on, okay, there's probably not going to be any large range expansions. It's the start of a new month. There's NFP tomorrow. So our expectations must be managed. So let's observe what happens inside here. It broke through that bullish order block here that we painted. Right, these were that consecutive series before it dropped, rallied, came back into it, closed down below the midpoint. So let's see what occurs here. Let's go take a look at these other indices. Wow, the Dow is magnificent in its delivery to the downside. So that's pretty telling. So look at this high here in the S&P and look at the high here. That's a possible SMT at a level of reasonable resistance, that being the breaker. So we'll see what happens as DXY tries to make a decision. We have the bonds continuing to move higher. Yields are tanking, supporting bullish indices. But you could just see the crack in correlation, as I mentioned, right? So yeah, let's monitor this SMT here at this breaker. Possibly looking to attack these equal lows. There she goes. So if you would have taken an entry off that breaker, you would already have another bread and butter, 20 plus, 40, 50 point move. Bread and butter, breaker, SMT at the highs. If you look at DXY, DXY is rallying at the same time. Equal lows as a potential targeting area, right? Inside of a consolidation, price doesn't even have to get down to there if you have the mindset that I'm sharing with you all. You don't have to get these large, huge ass expansions. You don't need to. You just need 20 or 30 points in and out. And you can do that and make a living. Not financial advice. Nothing's guaranteed, obviously. But, it's on full display. There's been two ideas. This run higher here, based on the context and framework we used earlier from the breaker that was eventually taken out. But then also, right, at the highs, there was SMT between the indices, right? Failure swing above here, This one took out the highs. So the NASDAQ is the weaker of the three, including the Dow as well. We're inside of that higher time frame daily fair value gap I mentioned, the 2-day, right? Still continuing to respect it. Bonds and yields promoting the opposing view. Obviously, there's a crack in correlation. But aside from that, right, the overall context, what we're viewing here, is all pretty much supported. You can also see these up candles. That's an order block, right? So price came back into that. Also use this fair value gap as an inversion. See the respect. You also can monitor the wicks here. Right? You can see the wick even here, pretty much respected. But aside from that, this breaker here, clearly in play. Clearly very obvious equal lows. Higher time frame again has not fully shifted to bullishness from the bearish sentiment. So it's very easy for us to get back in and trust this, because if it starts showing that we're getting back in line with that higher time frame narrative, because narrative doesn't change unless something fully changes, it makes it easier to get back in line. Even if we were looking for bullishness at first, like in this idea, we looked for it to run up above the highs potentially, but it failed to do that, create an SMT at the highs. DXY is now turned, and then obviously any bullish ideas were disrespected. Bearish ideas ended up setting up their potential opportunities. If you look at this high to that low, this breaker, right, this upper portion acts as a balanced price range. So the midpoint of that, as long as it stays intact, midpoint of the breaker candle, or the breaker consecutive candles, then we're pretty much in business as long as it can continue. Then we also had an SMT here. We also now see that the fair value gap's being respected. We see these consecutive up candles being respected. And on top of everything else, we see a very beautiful, beautiful equal low. Right? So I hope that makes sense. Shit, I'd say today's been pretty eventful. I hope it's been eventful for you guys as well. So yeah, so given all the hazards present in the marketplace right now, all the things we discussed, we were able to identify two specific ideas with very detailed context within validation levels, specific targets, One didn't fully reach the target, but didn't have to. Still offered 50 plus points. All you need is a portion of that. Price delivered inside of the 650 macro. And then obviously the breaker here ended up happening, 5-10 minutes, or offering the opportunity 5-10 minutes after the macro, and everything was in alignment. DXY turned around. The S&T was also at the highs between the indices, and there was just massive context. I did mention these lows. I had my eyes on those the whole time. Had your eyes on those the whole time, just in case. And obviously you can see just how important, or just how much they don't like to leave those types of levels open, especially if it's in alignment with a specific liquidity pool like the London's low or London's high. And we also talked about how the narrative is, like what the narrative is, it has been bearish. And we talked about what would change that, and the fact that, we stick to the overall narrative. We did find an idea here, right? Bullish against the overall narrative. And if it was to continue to break through those levels, it would invalidate the whole sentiment of being bearish, switching it to bullish. That did not occur, at least in this time, right? And then obviously ran above the highs, created a YouTube model here in conjunction with a bearish breaker, disrespected the bullish breaker, disrespected the fair value gap, had SMT at these highs, DXY turned around, SMT at the highs over here as well, above price up here. Offered the sell side delivery. I said these consecutive up candles as well would have offered another opportunity. And you can just see the wicks here. Wicks continue to be respected. So lots of reasons for us to have trusted the adjustment from looking for this idea. Once it got invalidated, I said, if this gets invalidated, price will likely reach down below these lows. Now tell me, did it do that? Is that validation, invalidation idea effective? If you saw this live the whole time, I hope that it's encouraged you and proven to you that there's very simple ways to identify whether you should or should not be in a trade, and what validates it, which would have been staying above this, along with intermarket relationships, and then what invalidates it, which was shown here, breaking through it and then offering sell side. All right. Well, yeah, you guys, I hope that everything we've discussed has made sense. I hope you guys got a ton of value from this call. Again, if you guys know anybody that you think this would benefit, or just someone, or you just know somebody that loves trading, I would definitely like to, have them part of the family. Whether that's here on YouTube, or if they're looking for one-on-one mentorship or group mentorship, whatever the case may be. Obviously, I still have that available. If it's not for you, that's fine. I appreciate all of you guys, regardless, for supporting the channel, for supporting the Instagram page, and just willing to lend your ear to me. And then, me hearing your guys' story is also something I really enjoy as well. Because again, that's the whole reason I'm even on YouTube or on the internet at all. Because I have no reason other than that. I'm not entertained. I don't look to be entertained by the internet. I entertain myself, right? And there's a lot of crazy, toxic crap going on. But yeah, guys, if you have any questions, definitely feel free to DM me on Instagram. Leave comments in the chat. In the chat, or in the comments on my videos. I definitely would like to hear your guys' stories, like I said, so let me know about your stories if you're open to sharing them with me. Maybe we could hop on a call and talk about some stuff as well if needed. But yeah, I hope this week has been eventful. I hope you guys have been safe. I hope that you've learned, or you continuously learn a lot and walk away from these calls knowing more than you did before you came onto the calls. And I hope that the WMG community and the content I provide will forever be an asset to you. And again, I greatly appreciate you guys' support. And if you can spread the word, like I said, I'd be grateful, very grateful for that. Not only for myself, but, how many people can we help, right? How many people's eyes can we open up? Aside from, the eyes ICT has opened up, there's some people out there still struggling. And if we could do our part to be a light in this industry that has so much darkness with scammers and frauds and liars, I think we're all doing a service to the community as a whole, for this industry that we have developed a love for, So, with that being said, you guys, thanks again. We'll be live on YouTube probably again next Monday. And then obviously Thursday again, just to review, similar to what we did this week. And then obviously for my private community, y'all know the drill. We'll be live the rest of the week going into the weekend. All right. So thank you guys. God bless you. And be safe. Don't do anything freaking crazy. And I will see y'all on the next one.